The Rebel Capitalist Show.
I was just glancing at your YouTube channel. I saw you've got some recent videos you have. The titles looked amazing. They looked really, really cool. A lot of the things that I've been thinking about myself. So the first thing I'd like you to explain, and I'm going to read right off my notes here, is your thumbnail in the video was talking about the IMF credit score. And I know you've really studied the IMF extensively. So can you go over what you were talking about in that video, and let's just go back and forth on it.
Okay. Well, what I'm really talking about is the way they're setting up the whole digital system that really enables them to have a lot more control on what the individuals can do. Because right now, we're separated, right? The IMF does everything through the banks. But when they're moving, as we're moving forward and moving more into this digital age, well, then they're going to have absolutely direct access to the individual. And they're going to definitely monitor that and control that access, but that also enables them to control how the individual moves forward. Whether it's financial or it's with anything else. So that's what I'm really referring to in there. And additionally, the IMF looks at different countries and gives them a different credit score.
Yeah, right.
So in their lending facility, that gives them more control there as well.
So how do you think they'll take control over the individual? Do you think they'll do that by introducing a digital SDR, and then that will be a medium of exchange, or how do you see it playing out?
Well, keep in mind that what's happening right now with roughly, and I'm going to be diving into this more next week, on a global basis, you have the global central banks all examining or converting or working on converting their currencies into digital currencies, which would then translate into the IMF basket.
Right.
Right? And it makes it, once everything is really digital, it makes it much easier for the IMF to control the weighting and who is in that basket. So where the Fed would actually have the direct control to the individuals, the IMF would have the direct control over the central banks.
Right, got it.
Right? So easy to translate policy, much easier than the current system.
Yeah, right. I did a video the other day where I was reading a blog post from Christine Lagarde.
Oh.
And this is when she was head of the IMF, so a couple years ago. And she was talking about how in the future, the person that goes to the store and buys beer and pizza through the algorithm, through AI, we could find out that they have a higher default rate on their mortgage compared to the person that goes to the store and buys organic broccoli and spring water, implying that with that data, we could charge or know the perfect interest rate to charge the person that buys beer and pizza, or we could charge the person that buys the broccoli and spring water, or whatever we deem appropriate, we being the global elite, we could charge that person a lower rate of interest. What do you think about that?
I think that's called nudging.
Right.
And that's really a lot of what we're talking about here. Yeah, it's giving the IMF and giving all the central bankers, because the IMF is every central banker and every treasury head, secretary. So that's who the IMF is. So that's how they get that direct control to the individual, and nudging you. Or maybe they actually want you to eat beer and pizza because it supports the pharmaceutical enterprises too, right? They've been subsidizing that for a long time, not subsidizing the broccoli eaters.
And one thing I've been thinking about a lot that I don't know a lot of people are talking about is the difference between a commercial bank and a central bank from the standpoint of lending. What I'm referring to specifically is a commercial bank is a private entity, or we'll call it semi-private nowadays, but they have a P&L. They have a profit,
Yep.
they have a loss, and they have a balance sheet. They need to be solvent. They can't have negative equity or they're bust. Whereas a central bank, theoretically, they don't have a P&L. They can issue a loan and they really don't have to worry about being paid back. They have an infinite balance sheet. They can have negative equity. I've
Yep.
heard some people on Twitter, some experts on FinTwit, say there are central banks, in fact, that are still functioning that do have negative equity. So how would that change the dynamic in lending if people were borrowing from the central bank, an entity that didn't have to worry about a P&L?
Well, I think we're experiencing that right now because, in essence, we are all doing modern money theory
Right.
by just creating this money out of thin air. And, you know, also in theory, you're right, because they create the money so they can always repay the debt. That's why most government debt is also AAA rated, because it's full faith and credit.
Right.
So that's going to have a huge, that's why confidence is so important. Because you really, honestly, tell me one central bank that actually has a positive P&L balance sheet. They don't, because what they've taken on is all garbage. So
You're right.
how can somebody's debt that can never be repaid, or those derivative bets, the legacy bets that they bought off of all the banks' balance sheets, the commercial banks' balance sheets.
Like mortgage-backed securities, right?
Exactly. Okay, you tell me how they have any value. They cannot sell them into the marketplace.
Right. Or another thing I don't think I've heard a lot of people talk about is if the Fed does yield curve control,
They're already doing it.
then yeah, yeah. If they explicitly do yield curve control, then almost by definition they're buying bonds that have a lower yield than the rate of inflation. And if they keep those bonds, assuming that they can't reduce the size of the balance sheet, they might get paid back in nominal terms, but they're going to be paid back with cheaper dollars, and therefore they're going to be losing a lot of purchasing power if they couldn't just wave the magic wand and create more bank reserves. But my main point for the viewer and the listener is to point out that a central bank can lend, or if they merge the treasury, let's say, we'll talk about that later, the government or the central bank can lend on things other than a person's ability to pay back the loan. So they could use a social score, or they could use any objective they so choose. And in one of my recent videos, I was talking about how they may use that power to really shut down, like, Trump supporters, as an example.
Right.
And I know the people that watch my videos that might not like Trump say, oh, well, that's a good thing. But then I also mentioned that same
double-edged sword.
That's right. It gives them ability to also shut down Black Lives Matter or whatever group that you're in favor of. So the bottom line is we need less government power. But how do you see them yield or using that power in the future, like 2-3 years down the line, if we had this system play out that you're talking about? So the digital SDR is controlling the central banks. The central banks have their own digital currency that's being used within the real economy of each country. How would that change the average Joe and Jane's life on a daily basis, do you think?
Actually, I think it will change the average Joe and Jane's life by an extreme amount. And again, it's because of what they call nudging you in the direction that they want you to go in.
Right.
And this would be, I mean, they've been doing that forever. And financial repression, I have to bring that up because you mentioned if they explicitly do yield curve control. But in reality, if you look at a graph on the interest rates, they've really been using as a tool, as an admitted tool, financial repression for a very long time by particularly since 2008, by dropping those interest rates down to zero.
Right.
And keeping them there. So how has that impacted Joe and Jane, the savers, the people that are trying to generate income? It has pushed them out on the risk spectrum.
Right.
And that's even with quasi control. When they have absolute direct control and they want you to spend, they will just take you deeply into negative territory so that you can watch your principal evaporate knowing you're not spending it, and that will inspire you to go out and spend on anything to try and hold its value.
Right.
So, yeah, I mean, that...
Which somehow helps the economy.
Yeah,
somehow.
Just like inflation helps the economy.
Right, right.
Inflation simply enables the central bankers and the powers that be. It's really a substitution for real growth. We haven't had real growth in this economy really since, 97, which is when we peaked out on that debt, if you look at the monetary velocity chart, right?
Yeah,
so 97 was the last time taking on debt actually was truly stimulative to the economy.
Because productive debt.
Exactly. Yes. Thank you. It stimulated the stock market, right?
Yeah, right.
And so, yeah, no, once they have everything digital and they have absolutely direct control, I mean, what I love is that they are calling this, and it is, programmable money.
Yeah, right.
With controllable anonymity. Let that sink in for a second.
Yeah.
Programmable money, controllable anonymity. So when you're talking about the groups and their ability to shut them down, they'll be able to do that with the individuals as well.